And then welcome back to Closing Trades. Let's now get a sense of what the market is right now. Almost at the day's high right now, 25,075. In fact, inching very closer to that 25,100 mark. We have Dilip Bhatt, founder at Pedigree Advisory, joining us on the fundamentals, and Shrikant Chauhan as well as Nilesh Jain joining us on the technicals. Good afternoon to all of you. First, Dilip, let's talk about the texture of the market today. You know, so much is happening in terms of news flow on that GST, on the GST front, and that Lok Sabha discussion is also underway. But markets are not, factoring in the outcome. They seem to be very chirpy today and at the day's highest point. What is your read-through of the market today? And in the near term, do you think that 25,000 is something that we can hold on to and good days ahead?
Well, I think in terms of the news flow, I think GST has certainly been a good supporter for the market. It has given a strong support to the market. But I think having said that, it's more of a hope and it's more of a long term that as they simplify the GST rates and as the trade-off, of course, is between the loss of revenue and the increase in the consumption. And in the longer term, I think the consumption should go up. I think which is a very fair expectation, which is what market is also factoring in. But in the short run, I think there is bound to be some amount of disruption. And if there is any delay in this implementation, I think we'll see that we are running into a festival season. And if there is some disruption, even in the festival season, buying on the expectation that either the prices will come down and people will start postponing their purchases. So I think all those things are weighing in the minds of the market and the investors at the moment. And not to forget that government has already given a good concession in the last budget as far as the tax is concerned. Maybe that is yet to play out in terms of boosting the consumption and the demand. So now GST is also being rolled out in a way which is very necessary on a longer term basis to do the business properly. So I think all in all, I would say that in the short term, markets possibly will still try to move sideways, in my opinion, because the fundamentals have yet to catch up with the kind of the levels the markets are at the moment, though they are not very expensive. And expecting that this year we are going to grow at 8 to 9% in terms of the nifty EPS growth. Markets are very fairly valued, and I expect that markets would spend a little time-wise correction. That's what I think. And maybe I think as far as today, and on a day-to-day basis, there is more to do with the news flow that we are seeing, whether it is gaming, whether it is GST. And I think the geopolitical things, as they have made the markets a lot more volatile in terms of the news. And still the checkered flow of FIs is also playing in the minds of the investors.
All right, so that's the take coming in on the markets continue to be sideways, but yes, the markets are not looking that expensive at this point in time. But we also have Shrikant Chauhan as well as Nilesh with us. Very good morning, gentlemen, and thank you so much for your time. But Nilesh, firstly, your take on Nifty as well as Bank Nifty, because for today, Nifty Bank is seen to be taking a bit of a back seat, while Nifty 50 leading it from the front, and as of now, it's over 100 points of gain. Where do you see both these index headed?
Very good afternoon to you, Srishti. Good afternoon, everyone. As you have rightly pointed out, the Bank Nifty has been a laggard. In fact, not only today, if you see in last couple of trading sessions, Bank Nifty is underperforming compared to the Nifty index. The good part is that Nifty has given a good breakout today. The much awaited breakout above psychological barrier of 25,000, and also 50-day moving average that was also placed at 25,020, that has also been reclaimed. So the short-term structure looks positive, and the momentum indicators and oscillators have turned bullish. So we are expecting a follow-up move towards 25,200 to 25,250 on the upside. So buy and decline should be the strategy till time Nifty doesn't break below 24,850. So that should be the stop loss, and we are likely to see a strong momentum towards 25,200 to 25,250 on immediate basis. Although Bank Nifty, we are not expecting any sort of a major firework as of now. Looks like more sort of a consolidation, but yes, gradual up move is something that we can expect in the Bank Nifty as well. So overall, 56,000 is something that we are keeping an eye on. If it breaks above 56,000 in the spot, that will be a breakout for the Bank Nifty as well, and then target would be somewhere around 56,500 to 57,000. But as of now, the focus should be on the Nifty index. given the support that we are getting from the IT space, which is looks like has bottomed out. So we are likely to see a momentum to continue in the Nifty index.
Okay, and in fact, Shrikant, I just wanted to take that point ahead with you and talk about the Nifty IT, the top sectoral gainer today, and how, right? Because 3% uptick is what we're seeing on the index just today. Names like Infosys, Coforge, Emphasis, TCS. So it's not only the mid caps, it's also the larger end of the IT basket that's participating in this rally. So looking very balanced. What is your take on Nifty IT, the kind of move we're seeing today, and how much of the short build-up that we had seen on Nifty IT is covered so far? Shrikant, I believe you'll have to unmute yourself, please.
Sorry.
Yeah.
Good afternoon, everyone. So yeah, what you're saying is right. There is like good amount of short covering that we are witnessing in IT companies. Most of the IT stocks, they are recovering also on the back of there is specific meeting which is scheduled in on this Friday in Jackson Hole, and that will decide a lot about the rate cut interest rate path. So broadly, I am of the view that because of that, we are seeing buying interest in the IT companies. Otherwise, there is, we can say some value buying is happening, but otherwise, with a very short-term view, we can take call of creating some long positions, not with a very medium to long-term view, because in the medium to long term, I am expecting IT stocks to underperform. But in the near term, because of the overall momentum has changed in the market, we can see some buying interest, some short covering in IT companies. Otherwise, it is better to be more on the other side of the market. I'm to say there are a number of stocks which are doing well. Like today, we are seeing good amount of buying interest in hotels, as well as we are seeing buying interest in a few auto companies. So I think there we need to focus instead of focusing more on the IT companies.
All right, so that's the take coming in on the IT space. Yes, of course, not just IT, it's FMCG, select auto counters, they are buzzing too, but we'll discuss all of that and more on the other side of the break. Don't go anywhere, we'll be right back with more just after this quick break.
For the market coming in today, in fact, Aurobindo Pharma, the stock that we were just flagging off on the back of the clarification that they've issued, now down about 4% as we speak. But on the flip side, let's throw the spotlight on something that's doing very well today. And before the break, we were talking about IT stocks that are seeing the momentum across the pack. You have large caps, mid caps, all of them contributing to this almost 3% rally that we're seeing in Nifty IT. Now, despite a subdued performance by Indian IT companies, analysts are quite bullish on Indian tech stocks in the short run. Would this IT trajectory see an upward soon and follow Nasdaq? Because remember, Nasdaq has seen some very good gains in a trade yesterday on Wall Street. So is that going to be spilling over to Nifty for the longer term and not just today? Sharad is here with an analysis on that. Sharad.
Well, the street is replying. You see Nifty IT index, that's up more than 2%. The top sectoral gainer also in the day's trade. An interesting analysis coming in, especially the divergence which we have seen when it comes to the returns. Of course, the Nifty IT index, that's where we have seen the divergence coming in 2023, 2024. The returns, that's on the higher side for Nasdaq. But the change happened in 2025. Let's focus on that numbers. Nifty IT index, that's down 19%. On the other hand, Nasdaq is up 10%. So why the divergence? That's the question. Now, Nasdaq has much focused on semiconductors now, and that's where the weightage has increased, where there's no proper semiconductor play in Indian IT stocks. Big tech aided by AI investments, and earnings also have been better than Indian counterparts. Do remember, the US companies are largely product-based as well, and that is why there is a premium which the US tech stocks or the big tech stocks enjoy. Also, why Nifty IT might become very attractive in short term, that is very important, is short covering is still left from FIs, and we are seeing in the day's trade that's actually playing out as well. FIs are churning and moving from private banks to the IT space, and that is where the oscillation is happening. That'll be an interesting trend to catch up. And if you look on a fundamental basis, the valuations are attractive. They are near the 5-year average levels of the Indian IT stocks in the most of the cases. And last night, an important incident happened where AI-related stocks cracked in US markets. There was a rollback in some AI programs by big tech firms, and that is where the cause of concern is coming, that whether the froth will get cleared in the big tech IT stocks or not. And that's why the under-owned Indian IT space has become attractive for the smart money. Now, where does the problem still remain for Indian IT stocks? Because long-term issues are still there. AI adoption by companies may still affect the billings. There is the issues in hiring trends, and client budgets globally, they might change as well, as there is no certainty, and the companies are also not giving guidances going ahead. Now, service-based companies, which is the Indian pro forma of performing in the IT space, it is a limited product exposure. That's why the valuation premiums are not very rich. We are service-based exporters technically. And which stocks the analysts are most bullish on? TCS and Infosys, larger names, we see 19 to 23% 12-month return potential, and also HCL Tech making it to the list. Also, let's look at the mid-cap IT stocks. Where do they stand? Coforge, Emphasis, Persistence, LDI, Mindtree. Over here, the pick between the analysts is Coforge and Persistence Systems. So for a short-term move, we can see in the IT, and we are seeing today.
Well, indeed, Sharad, we are definitely seeing great moves on the IT space right now. And yes, that's the clear case with AI. The question mark remains, is that a bubble or some rollbacks that are still happening? The case for Indian IT is turning out to be favorable. And after that beaten down move that we have seen on the major IT companies, the stocks are making a good rebound. But along with that, Dilip, let me come to you to have your take on the FMCG basket, because today, of course, like you were also flagging off that the consumption is one of the themes that will definitely take up, and we are getting to see that the staples are now making a comeback. What, as per you, is making them attractive at this point in time?
Slightly, before I reply to that, just slightly on a macro basis, I think one should also look at the sector rotation that keeps on happening in the Nifty, and that also keeps the Nifty alive and kicking. So that's one part. But for FMCG, I've been maintaining now for quite some time. There are 2-3 factors playing out. One is the rural consumption has come back. The urban consumption has still to come back. That is still yet to inspire a lot of confidence. But I think the hope is that even that will come back sooner than later. That is one part. And second, of course, the fact that that overall the volume growth, when it comes back, I think without taking a price cut, what would possibly happen is some kind of operating leverage will still play out, and they'll be able to make good kind of profits. And sobering of the inflation is another factor that is certainly a tailwind for the FMCG companies. But all said and done, I think there is going to be a momentum which we are seeing possibly in the entire FMCG sector playing out over next 3 to 4 quarters. But the caveat over here is almost all the FMCG companies are exorbitantly expensive, without any doubt. Now, if you have to play for the momentum, it's a different thing. But on a fundamental basis, I think still the valuations will weigh in the minds of people, if at all they want to take it on a long-term basis.
So that's the take on some of these FMCG names, especially the staples basket. Dilip, thanks so much for your time, and good speaking with you today. But Shrikant, coming to you, or in fact, let's get a view coming in from Nilesh on some of these top gainers that are buzzing away in today's trade. Nilesh, 2 stocks on our radar today. Ola Electric, an 18% spike up is what we've seen on the stock, along with the Godfrey Phillips on the back of that cess that is going to be mulled in the Lok Sabha today, over and above that 40% GST, but that stock is doing very well, up about 12.5%. Give us a quick chart check on both Ola Electric as well as Godfrey, and if you're seeing any strength on the charts.
Right. So Ola Electric, first of all, to give you a disclaimer, we did recommend this particular counter yesterday to our client, and we have advised to book profit since back-to-back for the second consecutive session. We have seen a big spurt, and today it's up more than 16%. So it is not advisable to chase the momentum at high level because the risk and reward is not favorable. But yes, the undertone and the structure looks strong, and we are likely to see a further momentum towards 56 to 58 level on the upside, and quite possible that it may test the levels of 60 as well. But fresh longs can be added only on declines. They're about 48, 49 can be a good entry point, keeping a stop loss below 44. it's a buy on decline kind of a structure. Now coming to Godfrey Philip, again a very good setup in this particular counter. The counter is looking strong on the chart, and constantly it is forming a habit of formation as well. So yes, it can be added in a staggered manner. We may see a follow-up move to continue in this particular counter, and another kind of a 5 to 10% kind of upside can be seen in this particular stock as well. So Godfrey Philip is a buy at current level and can be added on declines as well. Stop loss should be placed below 10,000, and on the upside 11,500 kind of levels can be seen in a short run.
Can be a buy, but along with that, Ola Electric to book profits. That's what Nilesh has advised to his clients as well. But Shrikant, the other stock in focus today is actually Aurobindo Pharma. While there were some reports saying that the company will be, or rather is in talks with an M&A deal with respect to one of the European-based companies, that's going to be a very large one with like $5.5 billion worth size of deal that was quoted in some of the reports. But along with that, there's also a clarification coming in by the management itself, where they're saying that for now there are no such binding agreements which are in place, and to discuss all these M&As, that's a regular process. But Shrikant, what's your sense on Aurobindo Pharma? Because post this clarification as well, there's been no significant recovery from the day's lowest point.
Yeah, the stock is already down. I mean to say that even if the news is like we can say true, then it is already priced in and the stock is available at its 52-week lowest level. It was around some 1500 levels. From there all the way the stock has fallen to the levels of 1000, and currently it is around 1050, 1060. So in case if there is any reversal activity, then certainly we should look for adding this stock, because most of the time whenever there is a recovery in the market, whenever there is a bullishness in the market, or whenever there is a recovery in the pharma sector, we saw there is good amount of buying interest in Aurobindo Pharma, and it's a high beta stock. But at this level, certainly yes, it is better to stay away from taking any specific long bet or short bet at current levels.
Okay, so that's the take on Aurobindo Pharma. Let's talk about some other pockets where we've seen some action today. And Nilesh, before we let you go, just want to get your view on the telecom space. Now, of course, two listed players. You have Bharti as well as Vodafone, but this entire domino effect has started with Reliance Jio taking out its lowest offering, the lowest plan that they offer. What's your sense on the charts of Bharti Airtel and Vodafone? If maybe you're seeing some strength over there, what should the approach be to both of these stocks?
See, first of all, Bharti Airtel has been one of the good stock within the telecom space to be in the portfolio. So it can be added on declines. It's a good portfolio stock at a present level as well. It is trading well above its all long-term and short-term moving averages. So from here, the target on the upside comes somewhere around 2000, 2100. From a near-term perspective, we are pretty bullish in this particular stock. And also from a trading perspective as well, 1900 is acting as a very strong support. So that should be the stop loss for the longs. And it can be added in multiple tranches as well in the portfolio. So yes, it's a buy on Bharti Airtel from a short term as well from a position perspective. Coming to Vodafone Idea, see, we have seen a lot of underperformance in this particular counter. It has gone into extremely oversold territory, but now we are witnessing a strong rebound from the lower levels. So this pullback may extend further towards 7.5, or quite possible that it may test the 200-day moving average as well, which is currently placed at 7.7. So a breakout above 200 EMA is important for this particular counter to witness a turnaround. But as of now, purely from a pullback perspective, it can be played keeping a stop loss below 6.2. It's a trading bet purely from a pullback perspective.
All right, that's the take coming in on the telecom players. But Nilesh, thank you so much for taking the time out and speaking with us this afternoon. Just a few minutes left before we shut shop with very interesting comments.